Hello dear traders, I'm Maria Stradup and this is the review of crypto analytics from fx.co. It's the 24th of May today, Wednesday, and in our today's review. Europe has benefited from the confusing US regulations regarding cryptocurrency. How does the stability of the stock market affect Bitcoin? And what are the main targets for Bitcoin bulls now? And we will start with the article by Jakub Novak and some news, or better say some recent statements by CEO of Ripple, Brett Garlinghouse, who believes that the confusing US regulations regarding cryptocurrency have forced many prominent crypto projects, including Ripple, to consider investment opportunities outside the country, and Europe has benefited from this. And Garlinghouse suggested that the US should follow the United Kingdom and Singapore, which are trying to clarify their stance on cryptocurrencies to some extent. And notably, Ripple recently acquired the Swiss cryptocurrency startup Metaco, warning that the Securities and Exchange Commission's crackdown aimed at restricting the activities of his company could potentially lead to a complete ban in operations in the US. And he said that unfortunately that has encouraged companies like Ripple to invest more outside of the US. And he added that 95% of Ripple's customers are non-US residents, and most of Ripple's hiring this year will be outside of the US also. Garlinghouse described the acquisition of this Swiss startup as a perfect fit, both in terms of clients and location. It is expected that in addition to strengthening Ripple's presence abroad, Metaco, which was acquired for $250 million, will provide access to its clients as well as financial institutions such as BNP Paribas, Citi, and Societe Generale. And again, Garlinghouse emphasized the idea that the ideal cryptocurrency regulation system after the FTX crash, to which he said that US regulatory bodies should pay attention to countries like the United Kingdom, the United Arab Emirates, and Singapore, which have specifically clarified how they will regulate digital currency market. And according to him, such clarifications allow entrepreneurs and investors to interact constructively with regulatory authorities. Okay, and now let's say a couple of words about Ethereum here in Jakub's article. Let's have a look at the chart. So the focus of Ethereum buyers remains on defending the nearest support 1,790 and reclaiming resistance at 1,920. Only after that we can expect a move towards 2030, which will allow the bullish trend to continue and lead to a new surge in Ethereum to around 2130. If pressure on Ethereum resumes, a breakthrough of 1,790 is likely to lead to a test of 1,690 and 1,640. Breaking through these levels, the trading instrument may drop to a low of 1,570. Okay, let's have a look at the chart of Ethereum for the moment. It's the 24th of May and Ethereum opened today at the point 1,852 and then started to fall. And now at the moment of the publication, it is trading at the point 1,823. Well, so far It holds that very support level 1790. However, it's quite far from the nearest resistance level at the point 1920. But to better understand what's going to happen with Ethereum, let's talk about Bitcoin. And we move to another article by Tom Petrenko. So, over the past 2 weeks, the cryptocurrency market has significantly slowed down compared to the bullish March and mixed April. Trading volumes of major crypto assets and the number of daily users have decreased to local lows. Simultaneously with this process, we have witnessed the beginning of a prolonged consolidation movement within the range of 26,600, 27,500. And even important economic events failed to change the balance of power between bulls and bears, and therefore the price remained inside the channel. And the stock market has become one of the key reasons of why Bitcoin and other cryptocurrencies have become less attractive among investors. During March and April, when Bitcoin reached its local high, activity in the stock market stagnated, and there were several reasons for this. The first reason was the mass forecast of leading banks in the US and the world regarding pessimistic data during the reporting period, and analysts predicted that weak financial reports would cause a decline in the S&P index to the 3,200, 3,400 levels. But the situation turned out to be better than expected. And the second reason was the crisis in regional banks in the US, which occurred as a result of the hawkish policy of the US Federal Reserve. And meanwhile, Bitcoin and gold began to oppose the stock market and started moving towards local highs. However, over time, as inflation levels fell and the reporting period ended, the situation changed. And also, analysts suggest that further market growth can be expected in the near future. Bank of America confirms this and reports that the forecast for S&P in 2023 has been raised from 4,000 to 4,300. Overall, the situation in the stock market has stabilized, and therefore the S&P index confidently holds the 4,000 mark. However, there is a fly in the ointment, which lies in the US debt ceiling limit. According to the latest estimates, the US government funds will run out between June 8th and June 16th. If this happens, the United States faces a technical default, and the significant increase in default insurance premium size in 2023 confirms investors' concerns. The fear of that is another restraining factor for investors in relation to cryptocurrencies, and taking this into account, it can be concluded that financial markets just have frozen in anticipation of a resolution of the situation with the debt, and therefore significant price movements should not be expected due to the lack of short, medium-term strategies among investors. What's happening technically? Let's have a look at the charts. As of yesterday, the asset tried to test the resistance of 27,500, but retraced then to familiar positions and was trading at around 27,000 level with varying success approaches the upper boundary of the volatility channel. At the same time, trading volumes and address activity remain in low level. Meanwhile, technical metrics for Bitcoin on the chart demonstrate the prerequisites for bullish impulse. The stochastic is undergoing a broad bullish crossover. The RSI is approaching the 50 level. Additionally, if the MACD is one step away from completing the bullish crossover pattern, which is a strong signal for potential upward movement. So making a conclusion, Artem says that despite the asset's fundamental value and the commitment of long-term investors, Bitcoin lacks sufficient strength for a strong upward movement. However, technical metrics suggest that a bullish impulse is likely. So it's worth highlighting the order block of 27,250, 27,500 and the final level of 27,500 as the main targets for bulls in the upcoming upward surge. Okay, let's have a look at the chart of Bitcoin for the moment. It's the 24th of May and Bitcoin opened today at the point 27,215 and also started to decline, and now it is trading at the point 26,749. We see that it returned to the same levels it was a couple of days ago. So it still stays in the consolidating channel. It still doesn't move anywhere. And so far that very targets for bulls are not being tested. On the contrary, it's declining so far. This is all for today. We will see each other in our next review tomorrow. I wish you a nice day and profitable trading, and till next time.